Hello and welcome to our webinar series, the tokenization of securities. We've got an outstanding topic for you today. As you can see, some experts are going to be joining us to have this discussion. We're going to be breaking down the utilization of microservices in real estate investment banking. We've teamed up with some great partners within this webinar series. This is number 5 of 9, like JP Morgan, BlackRock, Coinbase, and then some others that you're going to meet today as well. So the person that is put this entire series together is going to introduce our guest, and that's the one and only CEO of Inveniam, Pat O'Meara. Pat, great to see you again, and thanks again for doing this.
Hey, it's absolutely my pleasure. Excuse me, Chris. Thanks for hosting. You've been great, over the last 2 years working with us, and we're always excited to be on your podcast. And thanks for hosting all of these.
Thank you. So if you want me to dive in, I will then introduce everybody. And as Pat had mentioned at the top, what we'd like to have you do is just share, 60 seconds, 2 minutes, a little bit about yourself, what you're doing to solve some problems within this domain. And then we'll give you some more time at the end here. So we'll start with Laura Palmatian. She's the founder of Height Zero Real Estate. Laura, welcome and great to see you again.
Thanks, Chris. And Pat, thank you for having me. It's always a pleasure, and I appreciate what you do in education and everything in the space. My name is Laura Palmatian. I am the founder of Height Zero. I have been in real estate and development for 20 years. I started my career on the island of Maui and working at general brokerage, niched into luxury pre-construction, hotel branded resort real estate. So Ritz-Carlton Residences, Mandarin Oriental, Auberge, Fairmont, ended up in the Caribbean on several of those projects. And then pivoted into the blockchain space about 3 years ago when I started learning about how this was going to affect real estate. So now we advise working with real estate companies, owners, developers on how to implement AI and blockchain into their real estate projects.
Laura, thank you for that. Will Powers with AKRU is sitting in for one of the founders, Mohsin. And so, Will, we appreciate you joining us. If you want to share your title and what you're doing at AKRU.
Sure. Thanks, Chris. Happy to be here. My name is Will Powers. I am COO and head of capital markets for AKRU. AKRU is a tokenization platform. We tokenize commercial real estate using blockchain technology. Real simply, that means we fractionalize the equity stack down into $1,000 bytes called tokens. And then we have a secondary trading platform that allows investors to buy and sell those tokens. So it really allows easy access for folks to get into high quality real estate for as low as $1,000.
Will, thank you so much for joining us. We appreciate it. Also, Peter Trevellis, Executive Managing Director with Cushman Wakefield. Peter, great to have you.
Thank you for having me. So in my 23 years here, I've spent most of my time finding ways to use our powerful platform to best serve our clients. And in the past 3-4 years, have had a great time and have been working very closely with Pat and the team at Inveniam to especially help our valuations business get in front of the movement we're seeing amongst our clients to digitize information.
Peter, thanks for that. Appreciate it. Also joining us today, Sam Grossman, Managing Director, Real Estate Services, Inveniam. Sam, it's great to see you again.
Great to see you as always. Chris, Pat, thanks for having me and putting this awesome panel together. I've been with Inveniam for 2 years. Prior to that, multifamily real estate development, my firm Fairchild Acquisitions, and excited to talk about tokenization today.
Great to have you, Sam. I'm also David Reese. He's the head of private equity solutions at the Apex Group. David, thank you so much for joining us and great to meet you.
Hey, Chris. No, thank you. And great to be on this panel with yourself, Pat, and everyone else. My name is David Reese. I lead our private equity solutions team here at Apex. I'm based in Miami, and I also have a large exposure to real assets. My role at the firm is really to evaluate new technology solutions and to better support our clients with different requirements as we go from fundraising to liquidation. For background, Apex administers close to $3 trillion in assets under administration, covering 85 locations in 45 countries globally. So we've really, expanded to a massive scale at this point. Historically, our bread and butter was core fund administration, but have really looked to become a single source solution for managers. So how can we support them across all their needs besides legal and audit? Thank you, and hand it back to you.
Thank you, David. It's great to have you with us. Pat, you're always humble about speaking about Inveniam, so we want to give you a chance to share the mission of Inveniam, and I know you're going to introduce our guests again and dive a little bit deeper into this topic.
Yeah. Hey, I want to thank everybody for being on here with us. And Inveniam is an operating system for data in a distributed data environment. And what that means is, and I'm going to kind of maybe just dive in on that just for a minute, right? In the original days when people were storing data, it was in a log or a ledger in a time sequenced version, and you would go search that looking for the data in that ledger or that log. And then there was a great leap forward in databases where they said, hey, listen, let's go and really have logic embedded as we store data in a database. And we're going to immediately relate that data to other pieces of data of like data, but you had to have preconceived that logic in, right? And that's how databases really work today. And if you have new logic that you want to apply or new services to an existing database, it is incredibly hard, almost to the point of impossible to do so on a database that has a lot of data in it that's already referenced to specific sets of data. And what that does is it creates some pretty significant limitations. So a lot of the solution is, let's put a database on top of these other databases with this new logic. And if there's new logic, there's a database on top of other databases. And as you can tell, that's not scalable. And so people are trying to come up with all the different ways they can preconceive of it. But that kind of second iteration where you put logic into a database, the reason that was done is because compute power was at a premium at that point. Does that make sense? And VMware, which kind of won in a whole lot of different ways, was because they said, listen, let's go back to some of the original mechanisms where we're going to take a little bit of database and a little bit of this readers of logs, and we're going to put today's 90s compute power on that, and we'll be okay. Well, what happened is, literally, we were able to, with Inveniam, say, with the advent of blockchain, we can say this is the definitive state of the ledger, who owns what today, and we can deliver data just in time, not from one big giant database in the middle, but from all these different databases. And we can tell you this is the state of the data, who's seen it, how it's been activated, and we deliver it to that token where that then compute power or service is delivered against the token. So the token, which is a time-based reality, a financial instrument, has a corporate identity, meaning it's a legally defined thing that the Chancery Court of the state of Delaware can understand. That the data is delivered at the same time of the compute function. And what that does is a lot of the functions that Apex does, right, where they're doing waterfall calculations, valuations, etc., they can administer the data through the life cycle of the asset and the life cycle of the fund more efficiently with less reconciliations. And I don't want to dive too deep into this, right? But when everybody's sure of the same state of data, the reconciliation is an arithmetic process. When you have a two-step or a three-step function and you're reconciling data that might be out of sync by a day or two or three, meaning you're settling securities in 3 days or in 10 days or in 30 days, depending on the type of asset, literally that function has an exponential, function, right? So it goes, depending on the number of steps, from arithmetic n+1, n+2 to n factorial of all the different things that you have to bring together. So if we can tell the state of the asset, so we can value the asset, so we can then value the capital stack, so we can trade the capital stack on a primary distribution, then on a secondary distribution, if we can keep all of that information up to date every single day, that's going to bring massive liquidity into real estate, right? And into all real world assets. And so this is what Inveniam does. We are that mechanism to deliver data just in time with auditability to this financial instrument, this token. And so we are that data layer that does that. And you know, we have a fellow who works with us, Kevin Cutterback. He had a great line, right? We sell dull things to shiny people and shiny things to dull people, right? So we sell dull things, meaning data, to the crypto people who want to get into the regulatory markets. And they're used to just flipping something real easy, Bitcoin. It trades 24/7, 365, because that Bitcoin is always the same thing. But we say now, if you're going to trade real world assets digitally, you need data infrastructure. That's a dull thing to a shiny person. The shiny thing to the dull person is we're selling into the staged securities, real estate infrastructure, real world assets markets. How do you get viral distribution? Because it took Coinbase roughly 120 years plus or minus, less time to reach 100 million customers than it took JP Morgan, right? So when Coinbase can reach, you know, the 100 million plus individual customers 120 years faster than it took JP Morgan, people go, what is that? How did they do that? How do I get that distribution? How do I get that liquidity? Not just in one jurisdiction, globally. We are selling a shiny thing. What's the infrastructure you need for viral distribution across multiple jurisdictions of real world assets to an industry that is sold typically with physical settlement and calling a localized network? And that's where you have all these different players, people like Cushman Wakefield, who's valuing assets. You have Apex, who's administering these interval funds of real assets. You have AKRU, who's giving a front-end solution for distribution. You have Laura walking people through. You have Sam Grossman and Inveniam, who began as a developer, who he was first a user of Inveniam, and then he liked the razor so much he bought the company. He came in and worked for Inveniam, and now his own assets that he developed as Fairchild Acquisitions, he actually pushed through AKRU. So that's what Inveniam does, right? We're pushing the data so that you can do this computation real time. You can make things instantaneous. We're able to bring this shiny thing, the threat of viral distribution, to a state industry, right? And that's what we're doing. And so that's what we do. And I guess what I'd like to do, if we can, I'm gonna start with you, Will. There's a lot of people who talk about tokenizing real estate. You know, Inveniam did some in 2017 and 2018, and it was hard getting people to take delivery. And there's all sorts of names, but I got to tell you, AKRU, you and Mosin are doing it, and you're doing it in a successful way, and you're pushing assets out. Tell us about what you're doing and kind of how you're doing it, and what is the value proposition you're delivering to not only the LP but the GP.
Sure. Thanks, Pat. So on the AKRU platform, as I said, we tokenize commercial real estate, and there's two sides to our platform. The first side is we work directly with asset owners, and the benefit for tokenization to an asset owner is creating a whole new level of liquidity. If you think about what asset owners have now for liquidity, they can either sell the asset in its entirety and move on from that and redeploy 100% of those dollars, or they can do a recap, take on some more debt, and pull some cash out of the deal. What tokenization allows them to do is what we call partial liquidity, and it allows them to access their equity stack, sell some of the equity without taking on additional debt, without losing control of the asset. They still manage the asset. It's still within their portfolio. So for example, you got a $10 million property, maybe it's a loan to value of 50%, $5 million on the equity stack. Let's say they've got a development deal or another project that they want to purchase. Instead of going to the crazy capital markets right now, they can take $1 or $2 million out of that property and redeploy into another asset. And they still own the property, they still manage the property. So for an asset owner, it creates a whole another level of liquidity, especially in this capital market scenario where it's pretty difficult to get some lending scenarios that are favorable. It allows them to access money they already have in their back pocket and move it to the front pocket. On the other side of the platform, we work directly with investors, and we also work with wealth advisors. And when you look at investing in real estate, there are four fundamental benefits to investing in real estate. Number one, it's a non-correlating asset class. Number two, you get a high level of alternative income relative to the other markets. Number three, you get some tax sheltering on that income. And number four, as we know over time, real estate does appreciate. The challenge with the current investing environment where they're doing REITs, non-traded REITs, Reg D offerings, is they get those benefits, but they don't get the ability to diversify, and they don't have any liquidity. So as a wealth manager wants to make an allocation on behalf of their client to real estate, they've had very limited options. And more importantly, they're a fiduciary, so they have to do the right thing by the client in order to charge an asset management fee. So what we've done is we've built the platform to give them all the benefits of direct investing into real estate with liquidity with our secondary market. And obviously partnering with Inveniam and using your data, it ensures that we've got good assets on the platform. We've got good data being presented to the investors so they can make sound decisions. And it really is just a much better way to invest in real estate, both directly for investors as well as wealth advisors.
Thank you. I think what you're doing is great. I love the way in which you've gone at it. So keep it up. We're so excited to be partners with you. Peter, I think I want to come to you, right? AKRU is a new entity out of Cincinnati. They're really just killing it. But Cushman, you've been around for a couple minutes. You're a larger entity. You got a large global coverage and a bunch of different verticals around real estate. Why are you looking at tokenization? What is tokenization going to do? Why does this matter? And where are the opportunities for Cushman Wakefield and for your clients?
I'm going to answer your question in a few ways, Pat. On a very basic level, when trusted data is delivered to our appraisers in real time, we can serve our clients better in the here and now by delivering more efficient appraisals. And here's what I mean by that. The data gathering phase that historically an appraiser has gone through, the minutia, is substantially eliminated. It's essentially now opening up the dashboard, which means that the intellectual component can really take hold. And valuations can happen more efficiently, more cost effectively, which means that we can do more of them for our clients. So the implications of that, more frequent marks provide better liquidity, better confidence that there could be secondary markets that investors can get in and get out. And then the derivative implications are almost endless. We all read the same articles online and in the newspaper. Major financial institutions are looking to digitize. Many are looking to tokenize. They want to get into an area where private real estate can be traded on secondary markets. And to get there, it starts with digitizing the middle office and providing these appraisals cost effectively, frequently, so that we can be that oracle of value.
I think price discovery in these assets is epically important, right? It opens the door to almost a cascading series of new opportunities and mechanisms for lending, secondary trading, indices, derivatives, you name it, right? Like it's all going to come from better data with price discovery on assets, whether individually or in funds, that are going to power the secondary markets, et cetera. And we think that Cushman & Wakefield will look almost like an S&P or a Moody's, where you're denominating real estate that the retail buyer is going to want to buy in the future, right? How does this look? What does it look? Because when you buy a bond and you buy a bond fund as a retail investor, those funds are denominated by credentials and criteria set by third parties. We think the role of somebody like Cushman & Wakefield is going to open the door for investors to come in, and they're going to not care about, is that asset in the middle of the block or on the corner, as long as they know its cash flow is X and Cushman & Wakefield says the quality is Y, and I can see the underlying asset data. Do you know what I mean? And the ability for Will and his customers to see a whole bunch of different people buying and building portfolios of real estate with very small dollar denominations per asset is really going to open the door for diversification of risk and all sorts of opportunities. And I think, Peter, you play a critical role in that.
Agreed.
David, as we do this, and you have let's talk real assets, right? Infrastructure. Let's talk real estate. As you have better price discovery data and more frequent data, et cetera, how does the concept of tokenization, how does the ability to get real-time data into your solutions impact your business at Apex?
Yeah, I think that's going to be huge. I mean, that's really where we see the market going. From, I guess, a market feedback standpoint, what we see is a lot of investors are pushing managers to really move more towards a liquid form of fund. So you have a lot of managers that historically were launching closed-ended funds, and investors have pushed them to move more to an evergreen structure, which provides a mechanism for liquidity. So this is a really big trend starting with investors. And, even at some of the recent conferences, we had Context 365 recently, which, Inveniam joined us at. And one of the key themes there was also from the allocator standpoint on the denominator effect. Basically, you have liquid markets moving a lot quicker than private asset pricing. And that's really, again, I think it highlights that sort of challenge that we have, is that data has been slow on the closed-ended space. And really this move towards, real-time data, more frequent pricing on the real asset side will create, again, more of a sort of a feedback loop that gets us closer to having liquid assets on the real asset side. So, I mean, it really starts, if you think about it, from the investor requirements, feeds through to the fund structures that managers are having to set up. And ultimately, we see that the industry is going to be moving that way where, closed-ended managers are moving more to the open-ended space from a liquidity standpoint. And also, we still see on the flip side of that, open-ended managers, which are, starting to invest in longer-term committed assets. So, it's one of those things where I think Apex is able to help managers navigate these ever-evolving, challenges in the industry. How do you set up your fund? How do you make sure that you're in the right systems? If you were on an open-ended system historically, how do you support a closed-ended fund and bring all that data together? So the data is going to differ depending on the fund structure and how you present that to investors. So we're really looking at that sort of full ecosystem and saying, okay, if this is the way that the industry is moving, we need to be able to support our clients throughout the whole process. And valuations is very much a key driver of what's going to get us from where we're at today, which is a little bit slower. We hear managers giving us the feedback that, hey, our valuation process is slow. We have to get the data from the underlying property managers. It's going to be delayed till March or April for 2022 reporting. That's sort of, I think to your point earlier, we're going from a T+1 environment to a T+, long-term environment. So as much as we can start really getting this digital flow of data, that's going to help end users such as Apex to more quickly turn around year-end reporting, to better support real-time pricing discovery. And eventually, I think that's really going to support the secondary market and liquidity across the from investor, fund to asset.
And as we think about that, let's just look in the news. And I hate to pick on this. I brought this up a couple times, but let's use BREIT as an example, right? Which they got CalPERS to put in $4.5 billion, which it's always nice to have friends, right? And so when there's a run on an interval fund and they max out, how do those interval funds and these evergreen funds, how does that intersection of tokenization and secondary markets and frequent marks of the underlying assets in the fund, let's kind of prognosticate and kind of prophesy into the future. What's that going to look like when you kind of put these three things together? Interval fund, secondary market. So even if it's drawn down fully, there's a mechanism for you to do that. And having third-party marks by somebody like Cushman Wakefield on the underlying assets on a quarterly basis. When we put that together, I think that means, Blackstone doesn't need to go to CalPERS. Do you know what I mean? That whole problem gets alleviated on a secondary market. Talk to us a little bit about how you think about that and tokenization and secondary markets aligned with these new market structures and better data. How will that impact market behaviors?
Yeah, that's a really good question. And I think you can go back to really when you structure a fund, you need to make sure that you match your asset liquidity to your investor liquidity. I mean, I think we have some, plenty of examples of where that did not work out. Example would be closed-ended funds. I recall, Third Avenue Management had a run on private credit where you basically had investments in these illiquid debt securities, which they were not able to liquidate quick enough, which really resulted in a run on the fund. So if you think about that sort of example as a comparable, if, in this sort of case recently with BREIT, you had investors demanding liquidity, but the asset liquidity did not really match that. So I think it really does, to your point, go hand in hand. The asset liquidity really needs to be in line with the investor liquidity, and that's going to better support the whole ecosystem so that you can avoid these sort of runs or need for injection of capital.
Yeah, I think, and I think when we start talking about the various different solutions, we're going to see lending solutions. We're going to see secondary markets. We're going to see valuation agents. We're going to see waterfall calculations. We're going to see new structures. We're going to see look through where when something goes into REO, when a building goes into default, you're not just going to put a lockbox on all the cash on the account. Suddenly they're going to be able to say they're going to demand repayment from the top 6 performing leases. You know what I mean? Where literally the money's not even going to hit the checking account. It's going to hit the smart contract distributed out. And you're going to see mechanisms of security diving all the way into the building itself. And I do think there'll be a lot of innovation as this data gets better. And Laura, let me go to you, right? As you talk to your clients and your prospects of interested folks, what are the things that are interesting them as they look at these various different, very large players from Apex and Cushman and new innovators like AKRU coming in, and then just old crusty development people like Sam Grossman, right? They think there's got to be something there, right? But what are your clients thinking?
Yeah, those old crusty developers, those are my favorite for sure. They're very interested, right? I mean, the option of liquidity is a big deal. So, I mean, we're talking to them about tokenizing, creating the option of liquidity in their existing assets, right? Deals that they've already closed. Talking to them about raising capital through tokenization or using tokenization to create a more desirable offering, right, for the investors. And there's a lot of interest around that. The problem, I mean, the reason why we've gotten very busy all of a sudden, and I think a lot of it has come from, there's this massive need in the industry right now where people don't know where to start, right? They're hearing these really big names that are getting involved in tokenization and blockchain, and they want to understand and learn more about it. They don't know where to go, and they're going to crypto people, right? People that are specialized and understand cryptocurrency, and they're trying to learn from them, and that's a problem, right? And trying to undo some of the things that they're learning, we're always trying to overcome that. But with tokenization, it's just giving them a lot of benefit, right, for them and for their investor.
Yeah, Laura, and we want to give the crypto folks their due because they're the most sophisticated users of blockchain right now. They've made money. They use blockchain exceptionally well, basically sorting floating point numbers, which is a thing, but it's an arithmetic of anything that has a decimal, where you can sort it and you can match it and you can trade that of Bitcoin. And they proved you can do this, and you can do this with anything: a car, space on a server, or securities, or real estate, right? But the question is, how do you gather the right data, deliver it so that you can sort through it, know the state of the asset, know how much inventory is there, so you're selling something that's still on the lot, or a security that's available for sale in a regulatory compliant way. So you have this viral distribution that works, that people are saying, how do we bridge into the mechanism so that my fund can be distributed on Coinbase or Binance or the widest market available globally, where people can see it and buy it if they want to, right? How do you get that broadest distribution? And I think, Sam, you're someone who's experienced the benefit of selling buildings, constructing partnerships within your own community, and then now using technology to access a broader audience and receiving the economic benefit of that. Why don't you talk about kind of your relationship, how you came to Inveniam, and what you're doing right now?
Yeah, thanks, Pat. I was a client first. I was looking for a technology to help me make my job, make my company more efficient. And efficient can mean many things. I look at a real estate transaction, and there's really three points of friction or lag times. And due diligence is obviously one of them. Inveniam's platform really helps with due diligence in providing actionable data that a prospective investor can sift through with one click and see what they want, when they want, how they want. The second being the appraisal process. As Peter spoke, Inveniam's tool pushes that information and really flips I call it the 75-25, and that in the old world, 75% of the time of an appraisal was collecting the data, and 25% was actually valuing the asset. Well, through Inveniam's technology and the delivering of that data, it's flipped, and that 75% of that time is used to value the asset and establish the state of the asset, and 25% is collecting the data, if it's even that. Plus, it's just more efficient overall. And then you put all those things together, with blockchain creating these efficient workflows, especially through Inveniam, the pushing and the polling, the if-then statements, really take the administrative tasks and the two biggest lags and have solved for it to make it a more efficient marketplace. Then there's the tokenization, which is the third piece of raising capital, or what to do from a recap standpoint. Do you want to go through the refinance process, which these days can take 4 to 6 months, or do you want to go to an AKRU and use AKRU to recap that asset instead, where you can probably do it in half the amount of time? We currently have gone of the latter. We are working with AKRU and Will and Mosin, also pushing the data through Inveniam.io, using Cushman to value the assets. The entire ecosystem at play. Why am I doing it? I think I'm doing it for two reasons. As a developer, I think it's the future, and I think it's a more efficient way, and providing the optionality of liquidity, not guaranteeing liquidity, but providing that optionality is a complete game changer from a value standpoint. There definitely is a premium put on the value of the asset, knowing that you have that liquidity optionality.
When you think about the nature of kind of the various different firms, we got Laura as kind of a Sherpa who will help clients through an ecosystem. We have Cushman Wakefield, a very large public company with a huge customer base, kind of some of the largest asset managers in the world that they service, to Apex, a global private company administering for, I think you're the largest administrator for real estate in the world, around 900 billion of real estate funds. And then Will at AKRU as an innovator, right? And Inveniam also as an innovator, a new company, been around for just over 6 years, right? It's amazing who is being drawn into this conversation around how do we operationalize this new technology and innovation. And I'm gonna throw it to you, Will, as you think about these various players who are on here, Cushman and Wakefield, Apex, and those brands and their customers. as well as Sam and Laura representing more individual developers and GPs. Where do you get the most excited about where you think this market will go? How will this drive secondary trading? How will this drive your business and others like you globally for tokenization of real estate? What does it mean as you see these other partners kind of weighing in, and what do you need from them for this to really take off?
Yeah, well, I can tell you, I've been in the capital markets industry, specifically for real estate for over 30 years now. And I can honestly tell you, I've never been more excited about what I'm doing and what the future holds for us. The partners that we have on this call today are extraordinary. And, we've raised money. I'm used to raising money the old way with those old crotchety real estate developers, like you mentioned. And no offense, Sam. And this is finally bringing real estate to, the current marketplace and looking so far down the road in the future that it's exponential. We've got folks like BlackRock and Apollo and all those folks that are looking to tokenize their portfolios. So it's really just continue to educate and really adoption is education. And we are all disruptors of the marketplace. And so our burden as a disruptor is to educate everyone. And I think as we do it collectively and together, it's not it's not a hockey stick anymore. It's an absolute rocket ship as far as the opportunity.
It really is in a connected data world. The adoption cycles are so fast when something finally reaches critical mass. It's unbelievable, right? And let's just talk about ChatGPT, right? It took 2 months for them to reach 100 million users. Coinbase was 6 years. Now, they did 7 years of work before they released the thing. So it was 7 years to get 2 months. You know what I mean? So nobody talks about those first 7 years of work that was into it. But I think you're right. When we can finally align all of the competencies and capabilities and integrate them seamlessly in all these little functions that need to occur, these microservices that need to align across the ecosystem, where it is not one monolithic player, but all of these players offering a collective service. So here's the best lenders. Here's the best valuation agents. Here's the best structuring agents. Here's the best administrators. Here's the best advisors about type and structure and how you do it and technology. And then here's the best marketplaces. I really think it's going to take off. And I'm going to go to you, Peter. When we think about where Cushman Wakefield is going to go using digital, I almost think that this is like, the story that Tara tells of Cushman Wakefield representing clients globally instead of in one location, right? Which really was the change agent to blow Cushman up. I think it's on that scale, but let me throw it to you.
Well, I just think about the magnitude of the debt portfolios, the equity portfolios, otherwise that we touch currently. And as everybody continues to move digital, the frequency of data that will be flowing through our systems will really give us that perspective to do really incredible things for our clients with that data as an oracle, to use the term I used earlier. I think some of the implications, our imaginations can run wild, and it's really exciting. And some of the implications we don't yet understand.
Yeah, and I think maybe the right analogy is the high yield bond market, right? When real estate when we have all of this synced together, right? And I think really the whole industry's waiting for Laura to get it together. But as soon as she has this all strung together, and maybe it's a few of us have to help, but as we do this, high yield bonds, when they went from level 3 to level 2, the market grew 10x and trading grew 100x. When you think about the size of the global real estate market and the global real world asset market and that type of throughput is there and that type of liquidity, and the mechanism for people who see arbs between markets, because there is no liquidity in one versus another, and now liquidity is there, and they're going to bring those in sync, and they're going to be medium frequency and then high frequency trading in real estate to bring those arbs together is going to allow people to go in and invest in a whole new way. And David, if you think about kind of your real world assets exposure, all the funds that you have, how does this get operationalized? How does it get sold fund by fund, one at a time? How does it get implemented for closed-end real estate funds, these interval funds, these real asset funds in multiple jurisdictions around the world? What are they going to embrace first? What's going to come second? And what's going to bring about kind of this our imagination catching hold and going all at once?
That's a great question. I think what you're seeing is that, you know, we're taking small steps, but, you know, we're definitely taking steps on each part of the value chain. So, you know, breaking that down, looking mostly at investors as an example, what you're seeing is that historically there was a lot more friction to getting assets into the space. So what you're really seeing is a democratization or retailization, the likes of Moonfair, iCapital, et cetera, bringing new capital into the space and new liquidity on the supply side. So, you know, some of the challenges that we see from the Apex standpoint is you now have an increasing amount of volume where historically you might have 50 to 100 investors coming into a fund, institutional level. You know, you need to perform AML on all of your investors and continuing to do the AML review on each of your investors. So we're looking at that and seeing, okay, well, if all this volume is coming down the chain, we have to make sure that we have the pipes set up to support that. Also, if you think about managers that are going to be launching in multi-jurisdictions. So again, Apex has laid out the pipes for, okay, we're in 45 countries currently. We can support a manager as they have, you know, a nexus in Luxembourg and Singapore and Cayman and the US, et cetera. So again, I think what we're doing is we're looking at building out those pipes and making sure that we're in front of this trend. Managers, you know, will increasingly be moving that way. So as you mentioned that, you know, if we could bring more liquidity to the space similar to the high yield bond market, you know, I think that's really what managers are looking for is how do we take advantage and start getting that premium?
And I really think, David, this is, you know, in the title we call this the microservices that are going to come about in real estate investment banking, where we talk about AML KYC, where we talk about multi-jurisdictional compliance, where we talk about accounting, K1, delivery, et cetera. You know, Will and AKRU, for him to be an expert, he doesn't want to have to do that. He wants to be able to partner with Apex. He wants to be able to partner with Cushman. He wants to be able to partner with a number of people, you know, Cushman valuing that asset, Cushman managing more assets around the globe, valuing real estate assets on a quarterly basis with trend analysis on a monthly basis, informing risk books of banks who are providing collateralization. And these are some of the things we're working with Cushman and Wakefield real time. But, you know, from my standpoint, I think that this, the microservices strung together, where the client has the ability to access for the GP on their own real estate, or the investor has the ability to have those microservices delivered from a number of different vendors, is going to create an efficient market instead of I'm in this ecosystem, meaning, all my, this one brand does everything for me. And Will, I'm going to come back to you real quick, and then I want to go to Sam. But when you right now are doing everything you're doing on a tokenized basis in the United States in a fully legally compliant manner. But I know from talking to Mohsen, you want to go into multiple jurisdictions, right? And you also want those tokens to be traded on multiple platforms. Talk to us about your need for an ecosystem to support you being high functioning in your role, not just in the US, but in multiple jurisdictions.
Yeah, I mean, we talk constantly to folks outside of the US that want to tokenize their assets. And the regulatory scenario in the US is far more stringent than it is outside our borders. So they have a little bit more latitude to do the work, and they're asking us for the help and the technology. What we need to do there is just work together. I think you made a great point, Pat, that we all have certain levels of expertise. Although we cross over a little bit in certain areas, I think if we all collaborate, and instead of a firm trying to be the one-stop shop for everything, let's all be very good at what we all do and work together in doing it. And then that way we can bring it globally and open it up to countries that don't have the technology, don't have the ability. It took us 3 years to build the tech. You've got firms that are saying, hey, we want to start tokenizing. Well, you're 3 years out before you even have smart contracts that are working the way they're supposed to be working. So why not collaborate with folks that already have that in play, and let's exponentially build that process out together as opposed to trying to compete, and let's build it to a much larger ocean as opposed to a bunch of little ponds.
Amen. The Sam, you're out talking to firms every day, right? Who not only are in the space, they want to get in the space, they're interested in this. Talk about how enticing is it to join an ecosystem versus fighting alone, right? And delivering this and having access to all of these services. And then the next question, which is completely and totally self-serving, is how big a deal is the data flowing through that ecosystem?
It's funny you mentioned that. I mean, data, it all starts with data. My mom's theme was always everything begins and ends with family. In this world, in this ecosystem, everything begins and ends with the data. It's very important. Having said that, in this ecosystem, I like to refer to it, as Will was saying, as a stay in your lane ecosystem, meaning it's okay if you don't do something well. Do what you do best. And if we all continue to do what we do best, understanding that better data is really the underlying, is the most important thing that drives this entire ecosystem. With the pipes of the ecosystem, everything runs through the verification, the credentialing, and the anchoring of the data, and the actioning of the data, right? So it's not just better data, right? Like, you can have better data, but what does better data mean? It's action. You can actually do something with it. That click through, being able to see what you want, when you want, how you want, that is incredibly attractive. And yes, real estate is one of the most inefficient marketplaces, industries in the world. Having said that, it's also one of the biggest part of economies across the world. So if we can actually provide efficiency to one of the biggest supporters of worldwide economies, and then the future really is the apexes, the family offices, the RIAs making allocations and being able to go to an AKRU and say, listen, here is, X million dollars, and I want a little bit in industrial, I want a little bit in this, I want a little bit in this, just like you allocate any other investment portfolio. That is sort of the jumpstart that I see in this whole, and that's what excites me. That decentralized, open, everyone can invest in real estate, and you can not invest in institutional grade REITs. We're talking about mom and pop operators that know the market better than anyone in the space, and they can get institutional dollars to support and let them execute their business plans efficiently.
Yeah, the McKinsey says that only 13% of the real estate market touches the institutional manager in some way or another. That means 87% of the market is literally mom and pop, individual buildings, 1, 2, 3, 4, 5 assets, etc. And the 13% of the market that is professionally managed is where you see the biggest throughput. You know what I mean? And what this means is, in my opinion, the pie that Apex and Cushman Wakefield is going to serve is going to double and triple. You know what I mean? Your pie is going to get bigger, Peter. Your pie is going to get bigger, David, as you have more and more real assets where you have good data. And let me just ask the question to both of you: how big a deal is it if you know you have good data versus data that is suspect, what does that mean for your ability to do your job? What does that mean for a subsequent sale? What versus, on good data versus bad data on an asset?
That's everything. Good data is everything. It allows us to streamline what we do, which means we can do more of it. We can do it more cost effectively, and we can have confidence when we bring it to our important clients.
Yeah, I'd echo what Peter said. I mean, it helps to streamline processes, avoid redundancies. Just looking at the value chain of how can different service providers each own one aspect of the data, so that it really comes together in one ecosystem. And that's really what GPs are looking for. How can I get a consolidated view of all aspects of the business in one sort of view? So yeah, exactly. I think data is king.
And whether we're looking at Archax or ADDX or ADDX or SDAX or SIX or Oasis Pro Markets or Rialto with funds, right? Or we're talking about AKRU with individual assets that they're taking out today, or we're talking about, and there's a dozen other players I could mention, Onera, et cetera, that are allowing banks, to interface with each other and to clear through their own distribution networks. The reality is there's an enormous number of players that need all of our services to fill them for these real estate assets, to have sufficient supply so that the demand can go there and know that it's there, but not only that that the supply is there for them to buy, but that it will be serviced over time correctly, right? Because buying a token one time is one thing, but having it serviced, knowing that there's a secondary market, knowing that it's going to continue to be valued, knowing that it's going to continue to be administered is that's the ante, right? That's not something we need to put in at the end. That's the ante. And so I want to thank all of you. And Laura, I'm going to maybe throw it to you for maybe a final comment, if you don't mind. Talk to us about who the early adopters are going to be from your side. Inveniam, we're dealing with typically very large institutions, right? But I think you are interfacing with a whole variety of people. Talk to us about who you think the early adopters are going to be.
Yeah, I mean, we're seeing Sam and Will, like they were saying, the mom and pops, right? Those that own real estate, they have maybe portfolio of product that isn't in the billions of dollars, right? They want to participate, and they're looking to, create the option of liquidity, raise capital. That's really always right for developers, and real estate owners are always looking for capital. So being able to walk them through that process, showing them how it could work with tokenization. Those are really the people that we're talking to. I was at a conference, like I'd mentioned earlier, multifamily conference this last weekend, and they're all interested. They all want, they all have some sort of interest in it, because it's a win-win, right? It's a win for them, and it's a win for their investors. So when everyone's winning, I mean, how can you go wrong?
Yeah, and I want to say that there's one thing that we probably, Chris, should have gotten out of the way at the beginning of this. But I want to say both Apex and Cushman Wakefield are investors in Inveniam, for full disclosure, right? We need to say that. We're great friends with Laura and AKRU, and Sam. I don't know that he's a friend. We tolerate him, but we love him, right? Because he drives outcomes that we need. And so, Sam, we love you, brother. Thanks for doing this. Melvin, you asked a question about frequent appraisals. Right now, most REITs are looking at once every 3 years for a third of their portfolio. You know what I mean? So that there's an annual mark every year, but some of those are stale to the tune of 2 years. Many are going back to annual. Prologis is the only large one that does monthly or quarterly, on all of their assets. But we think quarterly appraisals with trend analysis on a monthly basis, Fed, is something we're doing for some large banks today. And that alone will bring massive benefit. and having some type of AVM model, automated valuation model, interim between quarterly marks by a qualified valuation agent like a Cushman, that's going to come, and it's going to come fast. But for that AVM to work, we need more data points. And what drives data points? More appraisals, more transactions. It gets those data points in, and then the flywheel starts spinning, and that AVM, interim AVM, that might be able to get you a daily mark. But we also think for the large funds, like an interval fund or a closed-end fund that then gets listed on an exchange like an ADDX in Singapore, that might only trade, 1 day a quarter, where it's building a book for about 6 hours and it opens up trading for about 2. That's my comment on this. I would open the door for anybody else.
Yeah, I agree with you, Pat. What we try to do in our initial due diligence is a full appraisal, and then we want to mark to market the value of the asset every 90 days. So as investors come onto our platform, they've got real-time pricing guidance, so they can make a good decision as to what the value of the real estate asset is and the underlying token. So we're on board with at least quarterly.
Fantastic. Anybody else?
Yeah, anybody else want to jump in? Otherwise, Melvin, thanks for the question. To everybody here today, thank you so much. Pat, as always, thank you for putting this together. Just incredible content, and to hear where everything's going in this space. I want to remind you, this is number 5 of 9, so we'll do this again next Thursday. Be sure and share this with your colleagues, and join us next week. Have a great day.
Thanks, everybody. God bless you guys.